Hi, welcome to the video day, 1st of October, it's Saturday. In today's video we're going to be looking at our favourite technical trading setup. Now in terms of the trade setup, it's very easy to learn, it's very simple. All we're going to be doing is using big levels of support and resistance and looking at volatility levels in the pairs, okay? And now in terms of volatility we're going to be using one indicator, which is Bollinger Bands. Now in terms of the logic that this trade setup is based upon, it's very easy to understand. You can have confidence in it and you'll always get good risk to reward trades. Now in relation to the trade setup, I want to look at it in terms of the British pound. I did do a couple of videos on the British pound this week where I was looking for the pound to rally. The pound did rally. It rallied far further than we thought it would. We have now changed our bullish stance to a bearish stance and want to sell the GBP. Now I want to look at a couple of pairs I looked at in the earlier videos and a couple of new pairs in relation to this trade setup. Pairs are going to be GBPUSD, GBPNZD, GBPCAD, and finally GBPJPY. We'll go to the charts in just a moment. Now in terms of learning all our trading techniques, if you wish to do so, and also check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and get live access to our member centre. You can also get a limited discount code until October the 5th. Our course is priced in USD and the USD is obviously surged. So if you put the coupon code in, you can get a discount. Details below the video. You can also join our free mailing list. Check out our Facebook group of traders or join it, and also follow our Facebook page. Right, let's take a look at the trade setups. Right, from the chart of GBP USD, I'm just going to explain how the Bollinger Bands work, which you can see on my chart before we do our analysis. Now in terms of logic of Bollinger Bands, high volatility moves are mostly driven by sentiment, okay? Now in terms of looking at volatility in Bollinger Bands or on Bollinger Bands, the outer bands, the orange lines, when they're close together, you can see in the center of my chart, the volatility is relatively low, isn't it? When we come to the right of the chart, the bands become wide as the volatility increases, okay? Now, in terms of when you get a highly volatile move driven by sentiment, or a large part of it will be driven by sentiment, markets tend to correct overbought or oversold. Obviously, this chart, the pattern was oversold by reverting to a mean price. Now, a mean price in Bollinger Bands is the green line. It's a 20-day moving average, okay, so it smooths out short-term fluctuations. So when prices get pushed away too far from the mean, they will tend to revert. When you have a bullish or bearish extreme, you tend to find, the bullish or bearish fundamentals get discounted, and traders who've come in late, okay, to the move tend to get flushed out on stop. So for instance, in this one, this move was caused by the UK budget. Market took it as extremely bearish. A lot of traders piled in, more traders piled in. Then there's the stop flush out. Okay. Now, in terms of simple sentiment analysis, what's driving the move? It was the UK budget. In this case, I discussed that in more detail in terms of the last video I did. You can check it out. But the more aggressive the move becomes, the more the technicals come into play. Now, in terms when you get outside of outer Bollinger Bands on high volatility, you tend not to stay outside for long. You tend to come back within and revert to the mean, okay? You'll see here you come outside, you revert to the mean. Most of the time, prices will be contained by the Bollinger Bands, okay? So it's a pretty simple way of trading. Obviously, you've got to use support and resistance as well. Now, in terms of this pair, when we sold off down here in the last video, we were saying, well, this tail is meaningless, it's just a flash crash. These two bodies, I've just drawn my line through, significant. We were saying this candle, that tail poke through, rebound back within the outer Bollinger Band, that was a buy, okay, for a move up towards the mean price. Now, we didn't do this pair, we did the crosses, okay, but it would have worked out well for anyone who did. Now, in terms of this big candle here, this is where a huge amount of traders came in short, and we felt this candle would be retraced, and it has. Okay, so drop that line in there. Now, in terms of the bigger trend, it's down. If I just draw a trajectory, it's a gentle trend, big sell-off, rally to correct oversold. In the member center, we just literally sold off this trend line here at 112.10. Stop gets put behind the 20-day moving average, which you can see in a strong downtrend held price there. It very often does so. We just want to be back from the red candle behind the 20-day, and we're looking for a move back to the double bottom. Okay, now in terms of the pound moved down in high volatility against the USD, but the next pair are just way more volatile. It's probably the favorite pair of the four I'm looking at today. I like all of them. I'm doing all of them, but this is going to get the biggest allocation. All right, we're on GBPNZD. Now, if I take the move from the base of this blue candle I'm highlighting on the right, in just a week, we've moved up 6%. That is a huge move in this pair, and I haven't seen such a big move for many years. Now, obviously, we're looking to sell. We've punched outside of the outer Bollinger Band, and this run-on candle here, over 500 pips, but where is the resistance? Can't see it on the daily chart, so we're going to skip over, just bring it up, the monthly chart. Here it is. You've had a channel in place for well over 2.5 years with only one break, which was here, but that was on bullish fundamentals, bullish news for the pound. We broke out and then we immediately came back in. This is just shorts coming out in the market mostly, in our view. Okay, so we think the 2 barrier is going to be hard to take out. Okay, so if we go back to the daily chart, draw the level in, so 2. Now, we don't really have any level to go through that's close, do we? In terms of this, what I would do is when the new week opens, just want to see some weakness. We're at 199.29. I would go for like 50 pips lower, 198.80. Put the order in there. Put the stop back behind 2, let's say 240. And then see if she moves to the downside. If we go through the 2 level, we don't know if that's going to happen yet. If it does, we'd be looking to reset our entry. Okay, but this moment in time, if we can't get through 2, we want to go through 198.80, stop to 0040. Where could we go to? We've got the mean price here, the green line. I'm going to say the first level of support should be to retrace back to the base of this big blue. Okay, now in terms of your risk, you've got a near enough a 5-to-1 risk to reward to the base of that candle. Keep in mind the mean price will come up as this candle hopefully comes down. My view is the pound is so overbought, I think we could even run on to 192. Okay, but yeah, if we got to 194, that would be what I would consider to be a good result. Okay. Right, GBPJPY. I'm just using the charts from Member Centre. I've already drawn the lines in. I'm sure you get the idea of what we're doing in sort of broad sweep with this setup. Now, outside of the outer, back within, accelerate up to the mid, poke it, come back, but we're still blue on the day. I've drawn a level in here, which is 162 as a resistance level. Round numbers tend to be very important. I stress this in videos all the time. It's where the order flow is around. This is the level, the top line where my stop is going to be behind, and I'm going to go with minimal confirmation just through this trend line here. Hopefully we sell off to the downside to the 2 levels of support. Okay, if this one gets triggered, I'm looking for follow through immediately. I've said this in previous videos. You don't get follow through on this trade setup quickly, then you always take it out and reevaluate. Okay, but it's well over 5-to-1 in terms of risk to reward. Obviously, our view's got to come to fruition, but I like the look of it, and I view the yen as probably the most oversold major. Now, I did say I was going to look at GBP CAD. I actually meant GBP CHF. Okay, so here is GBP CHF. This is just a fantastic downtrend. And just look here, after you break the mid-Bollinger band, how it contains rallies. So you do get pokes through, you do get a close above there, here, etc. But we don't really move away from the mid. Then we go down again, poke touches the mid, down, big blue, touches the mid, down, outside of outer, bang, up, and we go through the mid. Now, my view is that hopefully we won't run away from the mid. If we do, we're going to miss the trade, okay? So all I'm looking for is the rally to fail into this resistance level here. You've got some bodies, 3 tails, 3 bodies, okay? Back through the mid, through that support line, and hopefully down, okay? And I think this is just a bounce in a bear market. I'm very bullish of the Swiss franc going forward. I mentioned that in previous videos. Again, another good risk to reward trade. So in terms of the trade setup, I think it's a simple one. I think it's effective. You can be comfortable with it, because if you lose, you don't lose much, but when you win a good amount. So the risk reward skewed in your favour. I just love using Bollinger bands and levels of support and resistance. I just like it. I'm trying to think of something else to add. No, that's it. That's the video for today. I hope you enjoyed it. I hope you found it useful. Thank you for watching the video. Take care.